Welcome back. Joining us on the show now is Rahul Sharma. He's Director India at International Zinc Association. Rahul, hi. Good to have you as always. You know, there are two or three themes that are working in the market. One is macro, and that really seems to be shadowing all fundamentals like supply and demand. And on the other side, there are supply concerns. But because there is absolutely no demand, we really are looking at very choppy prices right now. So even as there is an information that Glencore perhaps is looking to, curtail production at the Nordenham plant in Germany, we haven't seen the prices react as much.
Yeah, good afternoon, Manisha. I will attribute it to mix of higher energy prices in Europe, which is forcing European smelters to cut output of refined metal and depleting exchange inventories, which is generating time spread tightness on both the London Metal Exchange and Shanghai Metal Exchange. So being a global commodity, geopolitical situations play a key role in maintaining a smooth demand and supply for zinc. So while zinc markets after pandemic have strongly rebounded back, also you have recently heard that many prominent zinc producers in Europe have reduced their smelter output, be it Glencore or be it Nystar. Then moreover, warehouses stocks at London Metal Exchange and SME are at all-time low, which have in turn, set bullish outlook for zinc. With the closure of this, or reduced output of the Glencore smelter, probably you will see impact on the supply side in due course of time. Yeah, Manish.
Yeah, so absolutely, Rahul. So when you look at the supply side, that continues to see a decline. As you mentioned, the inventories on Shanghai LME have been falling. There also was a report, I remember last time that you mentioned that the International Lead and Zinc Study Group also has said that Jan to July, we've seen 2.5% of a decline in global refined output as well when it comes to zinc. Prices have seen a high this year, but with the kind of correction that we are seeing, would you say that the prices are not reacting to many of these supply side situations?
Well, presently there is a state of equilibrium on demand and supply side.
Okay.
But again, high energy cost is mounting pressure on supply side, and due to this, prices are rising. But as you know, that China is the biggest consumer of zinc in the world, and demand is mostly governed by Chinese consumption. Perhaps the greatest drag on the Chinese economy comes from the property sector, which has seen the nascent recovery from last year's downturn effectively reversed by this year's lockdown.
Okay.
So we are already seeing a gradual pickup in demand in China and other developing economies like India. So in terms of zinc supply so far this year, power costs have been top of mind for market participants. Then there are bad news coming from Nystar, Glencore. So they are planning to cut production at its European operations. Then moreover, mining giant, Glencore has said that they are adjusting production to reduce exposure to peak power pricing periods during the day. So, and you rightly mentioned that International Lead Zinc Study Group, they mentioned in a report that there will be a lower output of 2.5% for the first 7 months of this year. But we are optimistic that European smelters are finding one or the other way to increase their refined metal output.
Okay.
So I think as geopolitical tensions reduce and global economic situation improves, you can definitely see an increase in supply and demand of zinc worldwide.
All right. So when you talk just demand, what is your sense on what kind of a growth or an equilibrium will we find on that one? And what's your sense on prices then?
Definitely, the China is the biggest consumer of zinc and then followed by India. So as situation becomes normal in China, there will be a massive demand coming because government of China is planning to use huge money on the infrastructure upgradation. So all the infrastructure upgradation will require huge quantity of zinc. So definitely a big amount of demand will be coming out of China, and definitely India is following the demand. Then my assumption is that, although individual economies may experience technical recessions in the coming month, global zinc demand growth will remain positive. And interestingly, one catalyst to watch is LME and Shanghai Metal Exchange stocks, which are at a level where price volatility can be high.
Okay.
So combining all the indicators and present geopolitical situation, I foresee that zinc prices should be approximately USD 3,400 to 3,500 in short term. But coming winters, that will be very interesting. There will be certainly a challenging time for European smelters.
Oh, absolutely.
And it will be interesting for all of us to watch zinc prices then.
Yes,
So yes,
actually, that
markets
is.
are
Yes, Rahul. The winters is something that the markets are waiting for on how the energy prices and then the companies, corporate segment that use energy will really pan out on in the next 4 or 5 months. But I take your point that we still are looking at a demand growth, at least that is what you're working with. And the price is at around $3,400 to $3,500 per ton in case of zinc is what we foresee this winters. Rahul, thank you so much for joining us with that detailed explanation on what to expect from the metals market. With that, it's a wrap on Halftime Report. Business Lunch will take all the action forward.